Welcome back to Fractal Trading Trend Following Updates here on YouTube. First week in 2017, and it's looking pretty good. I was pretty happy with the closing in the trends that we're talking about here for the very first week this year. Kicking it off with the indices, we are looking at the S&P 500. When you look at the chart that is presented right now, we can see that our breakout fractal was right there. It had been hit in the old year, and look at what the first week in 2017 here really did. It is an up week which has approached the old high here right at 2275. The Dow Jones index is trading just below the 20,000 mark. You have thousands of people on Twitter talking about that level. I don't know if they think that the price is going to turn at that point, or why they are so eager about that level, because it's just another number. This is just another month, and we're just trading what we see on the charts. It doesn't matter what the number looks like, or what it sounds like, or what it is, or how much it is hyped. We are just following the trend, and the S&P is showing us how the market is performing. We see that it wants to continue to the upside. We even have rising momentum on the weekly still. There is no divergence forming right now, even though this part here is lower than this one. But as price keeps moving, we have quite the possibility, in my opinion, that this is going to continue to the upside. Let's take a look really quick at the monthly chart, because here we still do have the danger of a divergence forming. But the month of January here, after the first week only, is very strong enough anyway. Let's see where it closes. If it can continue higher and close high enough, then maybe a new bull market is around. If we take a look at other indices, for example the FTSE, we have the same kind of development. This is the monthly chart, and when you look at the price levels here at the very top of this indice, you can see that we are sort of approaching new kind of price levels that haven't been seen before. All of these years, in the last 10 years, had been trading around the same price levels. We had an uptrend correcting, then we are approaching these old highs again. We are failing there, as you can see here. We did not manage to establish a trend moving higher out. We did not go much higher than this high. Instead, we were correcting. But that correction then again did not manage to go lower than the previous correction, which had a target right here. It wasn't reached. Now we are coming out. We are crossing this all-time high here. We are even crossing the new all-time high made in 2015 at that level. And now the FTSE is one of the strongest indices, without too much doubt that it gives us that it wants to move higher. When you take a look at the current situation, there was a short break down here into the balance zone after this high was reached, but we did not trade lower. Now we have 4 fractals right there at that price level of around 7,000 points. 6690 here, 67. And price rejected that completely, and the last 5 weeks just moved out very, very strong. And even here in January, the first week is closing at the very high of where it's been. Let's see how much power, how much strength will remain in these markets. If we take a look over to Asia, the Japanese index, the Nikkei, is doing just the same thing. We have our breakouts down here. It doesn't really matter where you enter on this. The sooner the better, but still it doesn't matter if you want to get the big chunk, the middle meat of the move. It won't really matter if you are the first person in or not. You're just following and capturing the 60, 70 or 80% that this market is offering. And here we see the same thing. Even though the last 4 weeks had been pausing a little bit here at that price level of 19,400, we have a very strong week. It's closing at just below 19,600, and it's giving us this big green candle, which means that bulls are in control, momentum is moving higher, and we are most likely going to see new highs in here. The Nikkei index is also a very interesting one compared to European indices. It is behaving similar. It's different to the American indices because they are already at new all-time highs. They are already showing, well, they are showing some strength, but they are also, just as I mentioned, giving us the danger far away there that a monthly divergence could end the uptrend, and the movement that we see may not continue as strong just because we are not in a fresh move on the monthly chart. On the monthly, it's giving us divergences, but this is not true for the DAX, for example. We didn't look at it this week. We'll have it in here again next week, but the Japanese index shows us just that. You have your movement to the upside here, and now there is a correction. The correction goes below the zero line momentum wise. As soon as it does that, you know it's a major correction, and everything that starts afterwards in the old trend direction, which is this one here, an uptrend, is a fresh move, and this fresh move can take you quite a bit, and it will be the market who decides how far it wants to go. In my opinion here, the Nikkei is at a very interesting and very important level right now, because it's about to create, or it has already created, this fresh move, moving outside, trading through everything that we see. Give me a second here. Everything that we see in kind of this resistance area. That's where prices had never been able to cross for the last 30 years. And now with this fresh kind of move here, I think we have a possibility that we'll go through that, and there is a new bull market, and this market could hit the old all-time highs. Now, in order to do that, this market would have to double. It's now at just around 20,000. It would have to go to 40,000 to do that. It's not going to happen until March or anything, but we do have a possibility to trend follow this as it is trying to get to these old highs. We'll just see what happens in here. We have our weekly chart where we are following this, and we will see what happens as the market approaches this old resistance zone up here. Right now, this is very strong. Momentum is rising. We are in a fresh move, and in my opinion, this is one of the best indices you could be trading right now. Let's now take a look at some of the forex markets. Euro dollar has been a short. It's still a short. We had been entering here at this breakout, and now the price continues down. Obviously, this market has strong support down here at the old low where this move finished, and we are now trading for the past 4 weeks right on top of that level. However, I don't see too much of a rejection of that level. I don't see too much of bulls coming in and decisively ending the week that shows us this market does not want to go down more. Instead, what we see is price just hovering on top of that level here, and the monthly is actually showing a breakout to the downside. When you take a look to the left over here, this is our next important demand zone, and as we are crossing this support, breaking out successfully, in my opinion, we have a pretty good chance for this trend to run all the way down into this level. Right now we have not crossed it successfully. We'll just have to wait a little bit more, but trust the market long term. Follow what the market tells us long term. It is still in a downtrend because it had been down here. This is a simple correction to or a simple sideways correction. It didn't even jump to the upside or bounce off of this level. It is just breaking out now again and continuing down. That is the most logic interpretation, in my opinion. It's not even an interpretation, it's just looking and seeing what the market is telling you. And from a trend following perspective, of course, we are playing this and waiting for this market to unfold further. It doesn't matter to us if it takes 5 weeks down here or just 2 weeks or 10 weeks. We'll trade the system and we'll follow the market. Right now, no heavy bounce to the upside. Our positions are in profit and we're letting it run. British pound Australian. That is quite the well, there's quite something special that I have to mention about this week. Been talking about this since June. This is the 3 breakout signals. We let it run. In here, the market came back into the balance zone, and now it is showing us in the first week of January here that it wants to go lower. However, by our system, by my system, I should be exiting trends as soon as a fractal inside the balance zone gets hit. Now the high of this fractal here is 171.73. The high of this candle though is 172.01, which means I should be stopped out here. I'm not stopped out though, because the bucket shop brokers that you will find in the FX space, they had, or at least my broker had on Monday this week, a holiday. However, the market prices in their platform were ticking, and the price was going higher in the morning, and at around 11 a.m. it turned around and continued down, and it has continued down until the end of the week. Since it was a holiday in their trading platform, my stop was not honored. I was sitting there and watching how it crosses my stop, and it didn't hit. So it was higher than the stop, but it didn't get hit. And on the next day, since price was lower already, the positions were just still in the market, and I'm now still short. In a reputable and serious broker, this would not have happened. You would not have a platform that ticks higher than your stop and then goes down without stopping you out. What you would usually get is a closed market, no quotes in your platform, and then you get a gap down opening, which would still have me in this market. So everything is right. I got lucky here, but it just shows again, what are they doing? You know, what are they? How come their platform is ticking when the market is closed? It makes no sense. Going further into forex markets, the US dollar is very interesting here too. We were looking at these breakouts, and the market has really continued higher. However, watch out for the divergence that we might be getting here on the weekly, which could weaken the US dollar pretty soon. We are already seeing that there is upside momentum, of course, but we again and again have these red candles in here, which kind of take a break. We can see that the angle of the balance zone is not directed to the upside too much. We don't have a momentum rush here. It's just usually how the market goes to the upside. However, not a strong move, not as strong as what we saw over here in the previous uptrend. We are creating this divergence here pretty likely, which means that there could be some weakness in the US dollar in the coming weeks or months. Who knows how long this takes until it turns. I wouldn't be overly bullish here. I wouldn't be entering here. Now I'm long from down here, and I will exit as my system tells me, but there will be no add-on positions in the US dollar for now. We have a US dollar forex pair. We are looking at the US dollar Canadian, which has been pretty unthankful. We do see a market breakout right there. It retraces into the balance zone, breaks out above this fractal, but then retraces right again. Currently, the stop is sitting right below the fractal at that point here. The weekly close does not look too good for this position, for this long position. Who knows if the US dollar CAD is able to turn this around, go to the upside, or if it will extend its correction, coming back down to that level, failing, and then going up, or heading into a major correction, into a massive correction on the monthly. We don't know. We have a high right there. Market comes into the balance zone. If it fails to break to the upside again, to reach this old high, it's very likely we are continuing this correction to towards the blue line, towards the old fractal that is created here, and then we'll see a turnaround to the upside or even a break lower. We don't know that yet. We'll have to wait, and thanks God we are using risk management, as this is yet another market that doesn't get going, and we're just waiting to be stopped out right there. It's looking just a little bit better in the US dollar yen. This market was really jumping to the upside, as you can see. Now it has been pausing over the New Year holidays, Christmas holidays, and this is for me just a waiting game here. We are up so much, we are high so much. It doesn't matter if it takes another 8 weeks sideways movement before this trend possibly continues to the upside. I do still think that US dollar yen will do that and continue higher before the trend breaks. Very different than US dollar Canadian and the US dollar index. The trend is running, there's nothing to do, momentum is up, just a waiting game. Where we see some new successful breakouts is the Australian currency as well as the New Zealand dollar. We have a breakout fractal here. It was approached from bottom to up this week, but we failed. Market retraces. We're closing into the first third of the candle, which is, in my opinion, a sign for the trend to still be active, to still continue, even though, as you can see, it's not really giving us too much of momentum to the downside. It's slow, it's probably going to remain slow and will fail somewhere either here at this level here where the demand is sitting, or if we're lucky, we're going to go and come further down here, since we are looking at a divergence. When you take a look at the momentum high down here, we'll now have a extension move to the downside, but it's very unlikely, in my opinion, that momentum will make a new low lower than we were here, which would then mean that as we are approaching these zones, we might have a lower price at that level, but momentum won't be as low, giving us the divergence, and then this market could turn around. Again, this would make sense in regard to weakening US dollar. Australian dollar is showing us pretty much the same thing, except that there is not too much space left to the downside. We're short from here, we're letting it run too, but as you can see, it takes a long time to get going, even a little bit, and there doesn't seem to be too much decisiveness to reach these old levels down here. It will probably happen, but as it happens, who knows if there will be a longer term turnaround where we need like a month, 2 months to turn around, or if this is going to happen really quick, because there's just a massive lack of momentum to the downside, and then as you have another lack of sellers coming in, which they are not, and buyers buying off that support here, this market could turn around pretty quickly. So we're letting it run now, we're following the system. Everything I'm commenting on is of course my opinion. I don't know if that is what's really gonna happen, and we're just following the signals and have an overall idea of what market structure is telling us, where the or in which directions the fractals are actually hit, and then we are following that. So in conclusion, we have some great indices. We have a euro dollar that looks promising, as well as the British pound that still continues down, and also still working is the US dollar index, a long position, even though some of the US dollar pairs as well as the index are showing divergences, and there could be some turnaround there soon, which would make, again, for some great trends in the other direction for maybe the later half or the later quarter of 2017. Thanks again for watching my stuff. Like it if you like it, and subscribe, and see you next week.